What's up, guys? Welcome back to the channel. Today I'm going to give you a useful trading exercise that can really improve your trading. So stay tuned and enjoy the video. All right, so we are at the euro dollar chart, and today I want to give you an exercise that you can use to become better. Now, in terms of trading strategy, in my opinion, it's always about a setup and a location. In my personal trading, I always trade my setup. So even if it's at a shit location, I still trade it because I know a setup on its own does give me an edge. I also know that if my setup happens at certain locations, my win rate goes up and my performance increases. And that's really what we're going to talk about in this session. So if you already have an entry set up, this video is going to be even more useful. But also if you don't, maybe you can learn something from this to also increase your trading. So in terms of locations, like I said, I always take my setup regardless of the location. But in terms of locations, if they are good, I take them with more risk because my strike rate is higher. Now, what is a good location, guys? How can you define a good location? And it's very hard, especially if you are a mechanical trader like I am, and then all of a sudden you put in a certain aspect like location. That's very hard to quantify and to make clear rules about it. So if you are a beginner, I'd say start as mechanical as possible. Simply because it's easier to measure if there's any edge, it's easier to follow a plan, and it's easier to establish discipline. And now once you've been trading a certain strategy for a while, a certain setup, and it does provide you with a bit of edge, then you can start by analyzing your results and look, okay, what if my setup happens at a certain location? Does it increase my strike rate? Doesn't? Maybe it doesn't. That's something you really want to think about when you are trading. So in my opinion, the best locations, and I always start with this on a daily time frame, are at boundaries of ranges. So for example, we have a range over here, and this is the range high. If I get a short setup in this area, my strike rate increases. If I get a long setup in this area, my strike rate increases. And the reason for that is quite simple, and I've spoken about this many times before. You simply want to highlight areas of liquidity, and you can do this just as an exercise. So for example, just grab a chart and analyze, all right, where is liquidity resting, or where was it resting? And yes, it's hindsight, but it does allow you to understand the concept better. For example, over here, we had a range high, and I've spoken about it before, but we had a range high. Now, what happens during a range? You get people buying and people selling. It's always the same, but people tend to place a lot of orders at boundaries of ranges. And then I mean, in this case, above the range. So people that are short anywhere in this area tend to place the stops above the high of the range, which means there's a lot of selling there, a lot of buying there, I mean, because if someone shorts and price goes up, he loses because he's buying back his order from the market. So a seller stop loss is a buy order. Then you have people that think, all right, we had a false breakout to the downside. This is a head and shoulders forming. We're breaking the neckline. I'm buying. So you also get people that are just want to be long and that are buying here. So you have forced buying from people that are short, and you have people that generally want to be long. So a lot of buying up here. And then this happened. It broke the area and quickly fell back below the level. Now, if there's so much buying, why is price going up? Because if there's a lot of demand, price usually should go up, but it's not the case. And it rejects. And then the next day, big down day. Now, this is an area where low liquidity is, and yes, it's hindsight, but this does tell you a great story about how a market usually works. And if we draw a line from this swing high, look at that, we break it, quickly fall back down. Same thing here. This is a key swing low. We break it and quickly go back up. Now, this is not coincidence, guys, and this is not just buying support. This is where liquidity is hiding. So to illustrate it, liquidity, then up here you have liquidity, and then below here you have liquidity. And these are, in my opinion, the key areas. So let's say I'm also going to draw in this over here. That's where liquidity is stacked. And let's say I get a short setup up here, this level, then the odds of winning increase. Why? Simply because if this happens that we've seen here, so people are short anywhere in this area, maybe people short here as price gets there, and they tend to place the stop above here. And people tend to buy a breakout. This is a strong level. So they think, all right, breakout, price moves up, maybe on a lower time frame, we'll get a retest, buy. And then if price collapses below the level, just like we've seen here or here, that tells me that there's a lot of buying and that all the buying has been absorbed by a bigger player, because this is not just a retail trader shorting at a particular area. This is someone intentionally absorbing liquidity from weak hands. And if I see that happening and my mechanical setup follows that type of price action, that is a great location to do business at. And you don't have to trade the exact same way as I do in terms of setup. But let me clean it up. If you draw in this line and you see at this location the same type of price action that we've seen here, so quick break above and then a quick collapse below, same thing like we've seen here. If you see that at that location and then anywhere in this area you get your short setup, it does play in line with the bias of the liquidity absorption above that area. And that's definitely the best thing you can do. Quick example. I went long the euro dollar after this breakout. Now, we had two equal daily lows. You can expect people that buy here put the stops below this area. Price runs into it, breaks these two daily lows, and then quickly rejects back up. Now, I went long in this area. I had my setup here and I went long. And it is just after this false breakout. So it's in line with the absorption of a bigger player, and a bigger player absorbed the sell side liquidity in this area. And I want to join him. And that's usually the line, the path with the least resistance. And trades that I take that are after these false breakouts, so at these great locations, they tend to move to my targets very quickly. And as I said, my strike rate is way higher. Normally it's 65%. Right now, I'm also taking trades with a 60% strike rate and a 1 to 1.2 R. But on these setups, my strike rate is around 75%. So that's quite an increase right now. Even in some instances when certain things align, it's even a bit higher. So that's quite a lot. So as you can see, setup plus location is just the best way to go. Doesn't mean you just can't trade your setup anywhere in the markets. Now, what I want you to do for the coming week is to grab the pairs you trade. So maybe you trade euro dollar only, maybe you trade multiple pairs, but you grab the pairs that you trade. And you're going to simply highlight key areas. Now, what are key areas? Range highs, like we've had seen here, equal lows, equal highs, and key swing lows that we've seen here. Just highlight these areas, and you can also do this on the hourly time frame because the concept is universal. So you're going to do that. For example, look at this. Key swing low to the market. You got these touches in the same area. price runs into it and quickly goes up, breaks structure here, and then takes off. So the concept works on any time frame, and you want to simply highlight these areas. So if I'm going to do it, I would be marking in that area. I would have been marking in that area, this area, because this is a range low. And then I would be marking in this range low and this range high. Now, what you want to do is just see what price does once it hits one of these levels. So as soon as it goes up here, is it closing above there? Is it staying above there and continuing? Or is it quickly rejecting? Same thing here. What if price falls down here? Do we get the same type of price action like we've seen here? Because it's kind of the same scenario. You got this range high, touch, 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 touch. And here we had equal lows. Price ran into it, quickly closed above structure, and then went to the top of the range. Is that something you get here? What can you tell? Do you see liquidity absorption below the lows? In that case, just like we've seen here, you can expect an impulse move to the other side of the range. If we see some liquidity absorption above the range, you can see continuation to the downside. The point is, highlight these areas and see if you can see something that stands out to you. Do you see liquidity absorption here? Because in this range, you can bet a lot of people are buying and selling, and the stops are gathering in these areas. And you want to see what happens when the stops get triggered. Do you get a continuation or quick breakdown? That's really the lesson of today, guys. So for the coming week, just highlight these areas and see how price reacts there. And maybe you can get some clues that you can use to build your strategy in a better way. So hopefully you guys enjoyed the video. If you have any questions, comment down below, and I would really appreciate it if you subscribe to the channel. I got back from holiday last week and I noticed we've hit 500 subscribers. So thank you guys very much for that. I really appreciate it. I really enjoy making these videos. I really enjoy reading your comments. I also on Telegram sometimes get a DM about people that learned a lot from my video. So I really enjoy that, guys, and hope you do the same. And thanks for watching. Speak to you in the next video.